Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Thursday, October the 10th, the year's 2019. Let's talk trading. Stupid trading arguments. Now, most of you probably won't get involved in stupid trading arguments because you're focused on your method, your portfolio, your trades, and you probably don't post on a bunch of trading forums or make YouTube videos. Well, over the years, in fact, it's been what, a couple of decades almost, or at least over a decade, since I've been posting online and sharing my code, sharing my systems, and I've been in a lot of stupid trading arguments. And for the most part, I thought it was over. But, about a month or so ago, I stumbled across another trading forum, and I started posting my YouTube videos there, links to them. Well, they wanted my indicators, and I told them, well, I only post my indicators in one place because that way I only have to maintain them in one place. But if I post my indicators on, dozen or more trading forums, that's going to take a lot of time every time I update an indicator if I find a problem. So I prefer to post my code in one place and one place only, with very few exceptions. So since I was new there, I posted a version of TROHL5 indicator there. Well, of course, they downloaded it. They were happy. But then, since then, I'd modified it and I had to fix something in it. And then it's like, but I tell people it's right in my code. Don't post my code on other forums. And the simple reason is that if they know where I post my code, then they can check it now and then to see if there's any updates, revisions. Because the worst thing is for somebody to share an old version of the code, it doesn't work right, or maybe there's a new mod and they're frustrated because they can't get the indicator to make it look like the one that I'm putting in the video. So, long story short, they shut down the thread. They want me to change my way. I go, look, I'm sharing it. If you guys, don't want to do that, fine. They're saying I'm spamming because I guess, I have my email address and I have my Facebook group. Ooh, that's spamming. That's directing people to another site. I mean, give me a break. It's the internet. It's like we don't go to other sites. These people, it's like this is a stupid trading argument. Or like, arguing with somebody over a squiggly line indicator. What's the best, settings? They're just stupid arguments. So avoid stupid arguments, you know, especially in trading and especially in life. Life's too short to waste it arguing with people. I mean, state your position and that's it. Either they accept it or they reject it and then move on. I've been reading a lot of that Stoic stuff, so maybe um, that might sound something like a Stoic would do. But yeah, just avoid those stupid trading arguments because you can't control what other people think about you. You can't. But one thing you can control is the risk that you place on each and every trade. And you can make sure you can control whether or not you lose more than what you're willing to lose per trade. Every now and then you might get one of those flashes where, hey, it blows right through the stop. But on a regular recurring basis, that doesn't happen. Normal basis, you can control that loss side. So if you place a trade and it starts to move against you, don't lose. Don't let it go past that stop loss point. Just don't. What do we have here? We have the dollar yen moving up like a banshee up into the previous week's upper wick zone here. We've covered that candle body. So, as you can see, an exit from that lower wick zone, you'd be up 112 pips. Right from the open, you're up 131. So, these simple horizontal line trades, I mean, even if you took the midpoint crossover, you're up 48 pips. These are all trades that, you can do pretty much once a week. We're working with the weekly candle here, maybe more. 170 pips below that yearly open. And it's been a while since we were above the weekly open. Let's see, how far back was that? That was back in the end of May. Now, very interesting here. You see, yesterday, or actually today, we dipped into the range, the trading range of the first day of the week right here. That candle. There's the high, there's the low. And what happened? We exited and we're up by 50 pips. Another very simple trade. Very simple. And we do this every day. Now, let's see, we're into the second week, trading week of the month. And actually, this month, if you look on the calendar, has 5 trading weeks. We got 3 5-day weeks and 2 4-day weeks, because the month started on a Tuesday and it's going to end on a Thursday. But let's look to see what happens at this 108.46 to go high and a 107.62 to go low. That first day of the month, that range right there. And see, these are trades you could even put these on right now. You could put in a buy. Let's see, you would put in a buy stop here and a sell stop there, and then your price. If you sell stop here, you're short. You buy stop here, you're long. Of course, you can also take that monthly buy zone trade too here to get long or short. See what happens when it gets near that monthly open. And I still haven't changed. Let me change that over right now. Then I can save. Save the template, save the profile. Let's see, we're looking at 2019 1001. And it's the only one we're above, it looks like right now. The open, we're above here. Is the open of September. And then the ranges, I need to change that to 2019 also. There you have it. And you can see we're above some of the lows here. We're above the June low, the August low, the September low, and the October low right now of day one. Inside bar, traders. I think I told you about this one yesterday. You see here, we dipped back into that inside bar and we shot out, and right now we're 50 pips above it. These little horizontal line trades. I mean, I guess the simplicity, they're just so simple that they're often, pushed to the side for something fancier, cooler looking. I mean, it's pretty boring seeing a horizontal line on the screen. And lots of ranges over 100. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, about half the pairs. Very interesting here on that daily. We dipped into the lower wick zone. We shot out of it. So you can see you'd be up 87 pips, taking the lower that, and then if you wanted to, you could have added on maybe at the high here, and you'd be up another 31 pips. And we just put in a weekly H1 highest open here, monthly D1 highest open here. Oh, and congrats, there was a trader out there that said they had some success on the rat zone, which we'll be looking at shortly. Here's the daily open right here. And you can see here's the weekly open. So since we're above both, we definitely can use that as a bias, even though the bias was outside of the short zone. So we took that short, nice reward. Then all bets were off. You can see here a long trade trigger. Here's a short trade. Not much happening here on this short trade. So best case was a scratch. Worst case, you got stopped out. Buy zone entry, pro entry here in the buy zone. And you can see we're up some pips. And I mentioned the rat zone trader. He said he tried it and was successful. But it's funny. I got a comment from one trader who says he's tried my methods and they just don't seem to work. And another trader tried the method and it worked. So you want to find out why it doesn't work? There's this thing called a mirror. You have to look at what you're doing. And my guess is chances are he's trader is probably trying to do more than one system and probably doing more than one pair on the system. And I'm not sure if he's a green rat or a red rat, but chances are he might be going long sometimes, going short the other. It just, all these variables don't provide a consistent performance. So if you're trying to learn a system, I don't care if it's one of mine or somebody else's. You stick with that system and that system only. You pick one pair or one instrument, one stock, I don't care what it is, and that's all you trade. You focus on it. You make sure you execute everything flawlessly. And then you'll see over time, does this method work or doesn't it? But you have to make sure you cut down on the variables because these methods have been proven. You know, this method's been around for what, a decade now, the rat zone. I mean, it's been proven, you know, statistically, geometrically, physically, logically. I mean, not to mention how many times, you know, traders have traded it profitably. So, you know, don't be so quick to say the method doesn't work. Maybe you haven't learned how to work it. So, pivots, we've already seen what happened there. And once again, on the next version of the dashboard I send out, you'll have closed the future pivot point so you can line up your trades for the next day. Took out that pivot. Took out this missed pivot right here just now. So we only have that missed pivot right here from back in September. And then we've got a bunch from May. And I think, let's see, we already took out the weekly pivot. Yeah, I told you guys about that earlier in the week. Price action. Once again, price doesn't like staying between two lines. Wick zone. Price doesn't like staying in the wick zone. You know, nice crossover, breakout over the previous day's high there. On the tick, you can see we're heading down slightly by just a couple of pips. Einstein line, not much action happening there. And we're getting ready to go into some other upper wick zones. Look for a reversal and look what's happening on the ATR for the week. So, fellow traders, just remember, Never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks.